everyone, I am Shivanka and welcome to this new video of management case study interview. The purpose of this video is to give you an understanding of how a management case study interview goes and what is expected of you. Fulfilling that purpose, this video is divided into two parts. In the first part, we'll be going through the interview and understand as we go along. In the second part, we'll look at the interview at an overall level and analyze it. Today we are doing a market entry case study interview where we have to analyze retirement benefit policies. Let's begin. A new retire a new retirement benefits policy has been introduced whereby every employee makes a contribution ranging from 5,000 to 2,000. Also, for a little bit of a context, if you're watching this for the first time, blue text with uh, all the blue text with white background, you see the statement of the candidate. On all the black text with blue background, you see the statement of the interviewer. Okay, so a new retirement benefits policy has been introduced where every employee makes a contribution ranging from 5,000 to 20,000. The savings, uh, the savings grow tax free until the employee retires. Uh, we have been approached by the client that runs a large mutual fund to help answer the following question. Is it a big opportunity? What are the various possibilities and challenges they would face? So the first statement told by the interviewer is one of the most important because it tells you the scope where you have to focus. So we know that a new retirement policy has been introduced. Employees can contribute from 5,000 to 20,000. The money grow tax free until they retire, and our client is a large mutual fund operator, and he wants to figure out how big is this opportunity and what are the various possibilities and challenges he has to keep in mind before considering going for this. So this is a market entry case study interview, and in the first part we'll try to more understand what is the situation like, because we don't know how is retirement policy related to mutual fund industry, and it's no issue asking questions if you don't understand the industry well, rather than assuming things. So first of all, you understand what is going along, and then we'll start analyzing, and in the last part we'll provide suggestions that what are the things the client should look for or whether they should go for it or not. Okay, I would like to explore three broad areas to answer this first question. The dynamics of mutual funds. Okay, exactly. So the dynamics of mutual fund industry. uh okay. The additional earning that we'll make in leveraging this opportunity, and the regulatory or exogenous factors affecting the mutual fund industry due to the change in existing policy. So we have to, first of all, what is the dynamics of mutual fund industry, how much earning we'll make from this new policy, and um, the regulatory of what are different factors which are affecting the mutual fund industries due to this change in policy. First, can you tell me more about the size and dynamics of the mutual fund industry? Sure. As you may be familiar, mutual fund companies solicit investments from individuals, okay, retirement account and various firms, etc. They they then invest these monies to create and manage a well diversified portfolio for a management fee. From the investor's perspective, the creation of such a portfolio minimizes the risk. Okay, so they collect from individuals' retirement, then they invest this and they create a well diversified portfolio for a management fee, and uh, having a well diversified portfolio minimizes your risks. Okay, difficulty in drawing lines. Okay, yeah, so yeah, it minimizes the risk. Got it. How big is this industry? There are a large number of players in the industry, and the total assets under management would be running into trillions. Okay. Do we know approximately how much money enters the industry each year? This might help me gauge whether or not the new policy will be a big opportunity for the industry. So, new money enters every year will tell you that we should go for this or not. Based on our internal studies and analysis, last year approximately 5 trillion was new money or addition to the assets under the management in the mutual fund industries. Okay. Okay. Is it safe to assume that only the people working in the organized sector shall be benefiting from this policy? Yes, the policy shall be validating only the employees in the organized sector. Okay, let me now move to gauging the incremental savings that is likely to enter the investment pool. I shall make some assumptions. Please stop me if any of them are unrealistic. My goal is to size the number of people working in organized sector in India, as well as they shall be paying the premium amount for this policy. Okay, I shall assume that the individuals between the ages 18 to 60 between the 18 to 60 are eligible to be employed. I shall assume that the life expectancy in India to be 70 years with the population distributed uniformly by age. Okay, that sounds fine for now. I shall break the population. Okay, so we are actually sizing the market to figure out how big of an opportunity it is in terms of the money which can be collected. And the candidate has divided people of India. So we are only looking into people on organized sector. That means people who are working or having a job. He has divided people from 18 to 60 years as employable, and then he is going to further analyze this to figure out how much money can be collected. I shall break the population of 1.2 billion people into rural and urban. That is 70-30 split. That gives me a 360 million people working in urban areas. I shall assume that the rural employment sector is not the organized sector. Additionally, people in the ages 80, additional people into in the ages 18 comprise 60% of the urban population, and approximately 70% 70% of these people are employable in organized sector. This helps me execute individuals like homemakers, students, etc., who would be in the 18 to 60 range bracket. So that brings me to the labor force of 150 million. Figuring out 10% employment rate, the population will be 135 million. Okay. 10% unemployment. So you figured out the population to be 135. So you understood, I think it was pretty straightforward that there are 1.2 billion people in India, with the rural have 70% and 30% in urban. So 30% of 1.2 would be 360 million people. So we have completely ignored rural sector as not much organized sector exists in rural areas, and we are only focusing on the urban sector. Um, so since we are looking at only employable people, so it will be in the age range 18 to 60, which is 60% of the population, so 60% of 360. Um, and out of that also we are only looking to 70% of the people who are working in organized sector in the city. And considering a 10% unemployment rate, we have also further reduced it to 90% of that 150 million people, which is 135 million people. Why don't you ignore the unemployment rate for now and assume a round number of 150? I think the interviewer is pretty helping you now, because calculating from 135 million further will be difficult. So it's really important when you're also doing calculations, it's good for you to come to easy calculated numbers, so that further maths becomes easy or relatively not much complicated for you. Okay, so let us consider 150 million. That would be easier for calculations. You indicated a range of 5,000 to 20,000 for retirement account contributions. Would these be recurring contributions? No. Also, you may assume that the contribution will be 10,000 on average. I think the interviewer is pretty helpful. He is helping him to work with whole numbers rather than him going too deep into difficult maths. Great. So the increase to the investable assets would be 150 million times 10,000, or 1.5 trillion. That sounds like a substantial increase. Given that last year the new addition to assets under management was 5 trillion, are there any other regulatory issues or exogenous factors that would govern or restrict how these assets can be invested? There are some stipulations, but let's not worry too much about them for now. Excellent. In that case, our response to the first question would surely be that this is substantial opportunity for a client to aggregate. So surely the client should go for this. Surely this is a big opportunity for a client. I would probably agree that this is a substantial opportunity in aggregate. But how would you go about determining if it is profitable, if it's a profitable opportunity? Uh, yeah, I think I should switch to highlighter because we're gonna figure out if it's a profitable opportunity. I think I see where you're going. You mentioned a client charges some sort of management fee for services rendered. How much is the fee and what types of expenses does our client occur? So now we have figured out that for the industry, this is a big opportunity. And now from the industry, we're moving it to our client's business and how much benefit the client can get from this opportunity. Good question. The client charges 1% management fee on the assets under management. Simplistically, let's assume that administrative fee on this assets like mailing statements, etc., is about 100 annually. What other operating expenses add up? While other operating expenses add up to about 10 basis points. Interesting. So then on every 10,000 invested, we make 100 in revenues per customer, but have 100 plus 10 or 110 in expenses per customer. That means that doesn't seem like it's profitable. So it does not, does it? Would you still think that this, would you still think that this still is substantial opportunity? We can look into future earnings as well. If I assume 20% growth rate based on the return earned from the additional AUM, then the 10,000 grows to 12,000. Our revenues grows to 120, but our expenses grow to 112. We begin to make profit. uh, If we know the average length of the customer's investment, we can use the present value of the cash flow to estimate a lifetime customer value to the client. Uh, so it does appear to be profitable, though I'm not sure how it compares to the profit currently. So currently we know that it's not profitable, but if you look at the future value, and there's a very very interesting term which is used here, which is present value of the cash flow. That means calculating in terms of is more of calculating how much valuable the money is today, considering the future growth or future earnings of the company as well. So money right now is more valuable uh, than the same money in future. So that is how that is how you see what is the present value of the cash flow currently, and you also see so you also take in account the future earnings and when calculating the present value of the cash flow rather than just seeing how much value you have in cash in hand. Um, yeah, and yeah, so for current amount, it's not profitable, but if you compare the present value of the future cash flows, it might be profitable because you're gonna make 120 and your cost is gonna be 112 only. You're correct. It is a profitable business. Right now, the size of each customer's account is pretty substantial. Uh, the profit margin is much more attractive. We seem to be running out of time. Can you quickly summarize for me the opportunities and challenges of the client spaces given our analysis so far? Okay, okay. So, sure. There are a number of opportunities, and along with it, among the opportunities, the first is cross-selling of the mutual fund opportunities to customers of the brokerage and other services. Um, yeah. So this would result in enhancing customers' loyalty and to increase switching cost, leading to higher customer retention. Okay, so you already have customer, and if you sell the services, the customer will stay loyal to you because it's like a retirement plan, and it will be difficult for your customer to switch. Second, emphasizing convenience, sort of like one-stop shop for financial services idea, and can enhance the client's value proposition to their customers. On the challenges front, the most critical is probably competition. If indeed 1.5 trillion additional fund are likely to be invested, every financial services is going to want a slice of the pie, which only underscores the need to cross sell and increase customer loyalty. This is something the client is going to have to deal with. Great, thank you. So this was very well done interview. It was not a typical market entry interview, but more of analyzing a policy for a client, uh, for him to try out this policy for its customers or not. So it's not a product launch or product entry, but more of a client adopting a policy kind of market entry interview. So the candidate did pretty well. He was able to work well with numbers, give out, understand the numbers, and provide recommendations based on them, and also think at an overall level what the problems would the client face if they want to go with it or not. So we will move to the second part of the video where we will look at the interview and analyze it as a whole. Okay, so uh, okay, so yeah, it's very important to maintain very clear and crisp notes, because at the end of the interview, the interviewer will ask for your notes, and he should be able to understand everything in one glance. So pretty standard things are interview notes and case facts, which is have a decent knowledge of Indian population breakdown in terms of rural and urban, demographics, income levels. Don't stop the profitability analysis at first year. Look at the future years to see the opportunity becomes profitable. Case facts are approximately 10 trillion were additional to the AUM. Average investment per year is rupees 10,000. Total number of people covered under the scheme is 600 million. Revenue per customer is 1% of AUM. Cost per customer is 100 fixed per customer and variable 0.1 of AUM. So this approach, which is a pretty straightforward flow chart, since it's not a very typical market entry interview, you have just divided in a population of 1.2 billion into 70% rural and 30% urban. Rural is not considered, and urban employable is 60%, and then uh, employee age is 60%, and the total number of people employable, and that is taken to be 70% of that, which is 150 million approximately. Financial projections, which have been done by the candidate to calculate uh, how if the opportunity is profitable for the client or not, is so potential assets under management would are 3.5 trillion in future, uh, currently. Revenue projections for client in year one is 100 rupees. Cost projection is 110. Revenue for client in year two is 120, and cost projection is 112. So it's profitable for the clients to do this if it's a long term game rather than currently which where the client is losing money in this policy. So let's see what are the recommendations offered by the candidate is cross-sell the mutual fund opportunity to customers of the brokerage and other services, emphasizing convenience, sort of shop stop for financial services idea can enhance the client's value proposition for the customers. Pretty straightforward recommendations. Um, make it a one-stop financial services stop, and that increase the value chain proposition for the clients. Cross-sell mutual fund opportunity to the existing customers and brokers and other services. What are the key learnings of the interview as a whole? What can we learn of how the interview went? Is run through the population split step by step, calculating the number of people at each step, and not just in the end. Yeah, so it's a good thing to keep coming to not keep turning to absolute numbers during the analysis rather than just applying calculating it in percentages and applying it in the end, there are chances of higher that you'll make a mistake if you keep playing with percentages and apply it, come to an absolute number in the end. In case you reach a scenario where the company is initially making losses, make sure you analyze future prospects to see if there is a turnaround in additional year. Decisions are made uh, base all decisions are made basis net present value of all the future cash flows. Pretty straightforward. Identify the scope of the problem right from the beginning. So that was uh, that was the interview where the candidate analyzed whether it's a good idea to uh, for a client to launch or adopt this retirement benefits policy. And it was pretty well done interview. I hope you guys learned a lot from it. If you want to build a career in consulting, it's a very good habit to watch different videos of mine, because I'll be uploading different categories of case studies such as profitability, market entry, guesstimate, uh, market sizing, and different kinds of case studies. And also, I'll be covering different industries, so you'll get an idea of how to navigate different industries, irrespective of if you have initial knowledge of that or not. If you watch all the videos of mine, you will understand, have a little bit of knowledge about most of the different industries which can possibly come up in a case study interview. And even if you are thrown at a new case study, which where you don't have initial knowledge, or you'll be able to navigate through it, because most of the times case studies have a different um, case studies have a same uh, logic, and you just have to understand what is expected of you and think from first principle basis. Uh, so so do subscribe to the channel so that you don't miss out to any video I upload. With that, I would like to say thank you for watching the video and have a nice day.